Okay, hello to those who have joined us right on time. My name is Nazia Hussain. I'm the product manager at the Institute of Sustainability Studies, and I'm delighted to welcome you all back to yet another webinar under the Sustainable Action Dialogue series, where we bring you leading experts who distill the jargon that's often associated with sustainability topics and hold focused discussions on content that can really help businesses and individuals realign commitment with action. And today, I am delighted to have all of you present for an exclusive webinar on CSRD Readiness, Essential Steps and Best Practices, being delivered by Dr. Sean O'Reilly, Assistant Professor at University College Dublin. He's also an esteemed faculty member of ISS. Sean is a leading advocate for sustainable finance in Ireland, and today he'll be giving you all the information you need to get CSRD right. Before I invite Sean to deliver the lecture, I just want to inform all the participants that the session is being recorded and the recording will be made available on the ISS website later. And please use the comment section to share your thoughts and questions, and I'll get around to asking Sean to answer those towards the end. So over to you, Sean.
Thanks, Nazia. Good afternoon, everybody. I hope you're keeping well. So I'm going to get straight into it because we have a lot to cover on CSRD readiness, and what we're really looking at today is the essential steps and best practices. Now, I've already been introduced, so I'm not going to do that again, but my name is Sean O'Reilly. I'm an assistant professor of accounting at UCD, and I do some work also with the Institute of Sustainability Studies, lecturing on sustainable finance and ESG reporting. So before we get into this in more detail on the CSRD itself, we'll just revisit what is sustainable finance. And it falls under the EU Green Deal. In recent times, there's a lot of talk about, a lot of terminologies that people are just getting their head around, and sustainable finance being one of them. So what actually is sustainable finance, and how does the reporting side tie into that? So the European Union Green Deal was brought to the EU Commission in December 2019, and the aim was is to mobilize, it's actually gone up now to 1.6 trillion of sustainable investment, and to develop an enabling framework to assist with the transition to a more sustainable business model. The aim also is to make Europe carbon neutral by 2050. And under the EU Green Deal, we have a number of headings, of which one of them is finance and regional development. And that's where the sustainable finance piece comes from. When we look deeper into the sustainable finance, what are the other headings that fall under that? It's sustainable finance and investing, EU taxonomy for sustainable activities, European Green Bond Standard, and so on and so on. There's a lot of different headings that are very, very comprehensive and detailed, but I've summarized them here and really have broken down in terms of, people think sustainable finance is just investing in sustainable companies or investing in clean technologies, but it's actually a lot more than that, because we have financing and investing will be one component, and the other side is reporting. And that's where the CSRD comes in. So we see EU taxonomy for sustainable activities, corporate disclosure of climate-related information, that's reporting. We have EU labels for benchmarks and ESG disclosures, again, that's reporting. So sustainable finance is not just investing in clean technologies, it's also reporting of ESG data. And this is where the CSRD comes under the European Union Green Deal. So that's just to provide a bit of background. Now, we have a lot of slides to get through, guys, so I'm trying to keep it very, very short at the start, because we will get into a lot of detail as we go through this. So pretty much an introduction to the session today, what we're going to cover. What is the CSRD? What are the ESRSs, the European Sustainability Reporting Standards? What are the key components of these particular standards? What's the impact on business going to be, and how can we prepare and get ready for this? And then what's the future outlook looking like? Okay, so the Corporate Sustainability Reporting Directive supports the European Union Green Deal and is part of the Sustainable Finance Package that we just talked about. The directive contains specific provisions requiring sustainability information to be subject to assurance. So that's audit, subject to assurance. We're going to talk about that later on. The reported sustainability information should form part of the management report in the annual report. So this is where it gets a little bit different now from next year on. We'll look at the dates shortly, that companies will have to submit this information or disclose this information in their annual report. There should be accuracy in all material aspects, as well as providing a complete picture. And then ultimately, there will be independent assurance providers and statutory auditors overseeing and verifying this particular information. Now, very quickly, the purpose, before we get to the implementation and some of the key dates, I suppose the purpose of the CSRD from the European Union and the Green Deal perspective is transparency and accountability. Something that isn't really out there at the moment when it comes to providing ESG data, and there has been cases of greenwashing. Now, that doesn't mean that's not going to happen again, but hopefully it will enhance transparency and accountability. We have standardization of reporting, so we should have just one reporting framework as opposed to multiple different reporting frameworks that are out there prior to the CSRD. It should give market confidence or investor confidence and market integrity, integration of sustainability into business because we're measuring what we're doing. It should have policy and economic alignment, and it will also help with risk management. Now, in terms of the implementation, and I know a lot of people who are joining this call probably have a good bit of insight into this already, or they have an idea as to what's coming down the tracks. But just again, a high-level overview. It was adopted in December 2022 in the European Commission that this was signed off. On the 1st of January 2023, the first set of sustainability reporting standards became available for consultation. Okay, they weren't finalized or anything like that, for consultation. And the exposure, there was an exposure draft, and it was all a lot of people had the opportunity to comment on it and provide insights and feedback and so on. And it was mainly around late July where the standards were signed off. Okay, and I'm going to show you them very, very soon. The key date that people need to focus on for large companies and listed firms that are already fall under the non-financial reporting directive, or the NFRD, non-financial reporting disclosures, I should say, it's going to be 2025 with respect of this year's data, 2024. So this is very, very urgent for these companies that they're going to have to report on this next year with respect of this financial year. It's going to then spread, the scope is going to be greater, and it's going to include if you hit two of these three, 250 employees or greater than 250 employees, greater than 40 million in turnover, and greater than 20 million in total assets. Listed companies are going to fall under this. Large companies currently incorporates companies not established in the EU that are listed on EU regulated markets, and EU subsidiaries of non-EU companies. So a lot of US companies will fall under this due to the fact that they have a lot of their headquarters in the EU. Listed SMEs to follow maybe in 2026. I think that's going to be pushed out. And there's voluntary SME reports that are being developed at the moment that I will share with you guys later on in the slide deck. And that's going to be 2028, or that's the suggestion. Now, a lot of these things will get pushed back as you know, the implementation phase continues, and we learn a lot from this from some of the larger companies. So that's let's say, the directive. But then we look at the European Sustainability Reporting Standards, or we'll refer to them as the ESRS. And EFRAG, the European Financial Reporting Advisory Group, are the group that put together these particular standards. So when we look at the standards themselves, or what they cover, and I think the next slide will actually be even better than this, but we have cross-cutting standards, topical standards, we have our environmental standards, our social, our governance, and then there's supposedly sector-specific standards, because we know that the sectoral difference is huge between different companies, and what they should disclose, you know, in terms of construction industry will be totally different to fossil fuels, will be totally different to a service provider or a technology company. So that's where the sector-specific stuff comes in. But when we look at it from a high level, and this is an overview, we have our general, which is ESRS 1, ESRS 2. They're general requirements and general disclosures. And then we see a breakdown for ESG. Environmental, we have 5 standards. For social, we have 4. And for governance, we have the 1. Now, the 2 standards, in my opinion, and from talking to a lot of people and from previous research that we have undertaken on sustainability reporting, my focus is always on SMEs, but ESRS E1, environmental, climate change, and ESRS S2, workers in the value chain, are going to be quite difficult for some of the largest companies in the world, mainly because in ESRS E1, there is a mandatory requirement to produce scope 3 emissions, which is greenhouse gas emissions that come from all your suppliers and networks in your supply chain. So if we are sourcing goods or products or whatever it might be from somewhere in China, we're going to have to show the greenhouse gas emission from that particular purchase or from those suppliers. So this is going to put pressure on the suppliers, but we are going to have to produce that evidence somehow. Also, workers in the value chain is something that a lot of companies are getting their head around, that again, we need to look at the workers in the value chain. No, and again, it's more so around workers' rights, human rights, and so on. But we have to understand, well, if we have a factory overseas somewhere, what impact is that having? Do they have proper working conditions? And so on and so forth. So that's what the overview looks like in terms of these standards. Now, guys, I'm hoping the slides will be shared later on, and I have links to the EFRAG website where we get more information, and there's small videos on each of the standards that we just looked at. But now what I'm going to do, and I know there might be a couple of seconds delay between what I'm showing on the screen and what you guys are seeing. So I'm just going to stop sharing this for one moment, if that's okay. And I'm going to open up the actual requirements under the EFRAG kind of list that they produce. Now, it's just loading at the moment, so there may be a couple of seconds delay. So I'm proposing that the guys at the ISS will share this with the participants on the call, and you'll be able to have a look at this, but not without going into it in too much detail, because again, I'm conscious of time and we could spend a whole week looking at this. Okay, I'm just going to go to ESRS E1. Here is a list of all the data points that you may or may not want to disclose. Okay, and maybe I'll zoom in and we'll have a look. For example, I'll highlight one or two. Financial resource allocated to action plan under our operational expenditure, and it's a monetary amount that we're going to have to show. And that's one of the data points we could put in. When we look down, let's say a semi-narrative disclosure, what's the type of climate-related risk that we have in our organization? We'll go down again, and I, as an accountant, I like to see, well, where are the data points, or where are the quantitative data? Let's say, did we achieve our greenhouse gas emission reduction? What is our expected greenhouse gas emission reduction? There's a lot of stuff here. If I want to go up and filter, I think it might be easier for me to filter by monetary, by quantitative, or something like that. We have greenhouse gas emission. I'll go down a little bit further, and we'll put in monetary percentage, and we'll see what comes back. So we can see, guys, let's say I'll show another one, percentage of fossil fuel source in total energy consumption as a percentage. Let's say we go down again, disclosure of types of contractual instruments, scope 2 greenhouse gas emissions, highlighted in yellow there. And guys, there are multiple different data points that we can disclose. Now, most of you are probably looking at this saying, this is absolutely insane, or it's an incredible amount of work. And yes, it is. There's a lot of different disclosures. Now, the good thing here for you guys, if you want to learn a little bit more about this, we will be able to share this with you so you can have a look at it. In a little bit more detail, you can see what's narrative, what's not. Some of them will be mandatory, others won't. It will be up to the company itself based off materiality. So that's the next thing that we're going to discuss now. So bear with me, and I'm just going to go back and I'm going to share my screen. So Nazia, if there's any issues, maybe you don't mind just shouting out, but I think we're okay. I'm aware there may be a slight delay. So guys, that is the data points and the details. Very, very comprehensive, because I find, well, there's a lot of workshops and sessions on the ESRS and on the CSRD and what we have to do. No one has actually specifically looked at the points. So that's something that I've no doubt the Institute of Sustainability Studies will be doing in the future. And I know they're developing a small booklet on the CSRD. They have additional modules specifically on the CSRD. So keep an eye out for that stuff as well, guys. So the big thing here that a lot of people have talked about, and a lot of uncertainty, is around the concept of materiality and something that's known as double materiality. Okay, so double materiality is a concept which provides criteria for the determination of whether a sustainability matter must be included in a company's sustainability report. The principle of double materiality drives companies to approach sustainability from two different perspectives. This is where the double materiality comes from. In accounting, we look at financial materiality, and auditors look at financial materiality. So this is slightly different. In relation to financial materiality, it implies something known as an outside-in perspective. So companies must consider all external sustainability impact that could, internally affect their future profitability. This is because external sustainability factors such as, ecological diversity, global warming, what impact that will have on cash flows and therefore on a company's ability to operate in the future. So we're looking at it from the perspective of financial materiality. However, when we look at impact materiality, and we could call this, environmental and social materiality if you wanted to, it's different from our financial materiality. It implies what's known as an inside-out perspective. So from the point of view, businesses need to consider the external impacts the operations have, including impacts on society and environment. So, for example, it could be contributions to air and water pollution, or their emissions or greenhouse gases that add to climate risk. So a sustainability matter under the CSRD meets the criteria of double materiality if it's material from either one or both of these particular perspectives. So this is where it's slightly different, in the sense that if we have a financial impact from sustainability issues, that's material, but the double materiality is what impact are we having on the environment. And if our business is impacting the environment somehow, we have to disclose that. We have to then go back to the CSRD, the Excel spreadsheet that I showed you guys, and we have to pick which data points are captured under that material item. Okay, so I hope that makes sense. Now, there are some data points that are mandatory, the scope 1, 2, and 3, and so on, but the others, we can select them based off materiality assessment, and it's double materiality. So that's something we have to be very, very careful of. My only fear is for something like this is companies will maybe not be overly transparent, or they may manipulate certain aspects of their business to say, well, it's actually, we don't do any damage, because they don't actually want to share that data. So this is going to be something that's very, very interesting to watch and navigate through over the next couple of years to see how companies adhere to this particular materiality assessment. So apologies I spent so long on that. That's kind of another graph, if you can see it, in relation to the outside in and inside out perspective. So, what impact is the environment having on us from a financial perspective? And then what impact are we having on the environment itself in terms of how we run our business? Now, guys, something that I personally am very, passionate about, and I just have a couple of slides in this because, again, a lot of people don't fall under the CSRD, or a lot of companies. We know that SMEs make up 99.8% of companies in the EU. So what about them? These are the backbone of the economy, in my own opinion. And, I believe that there will be pressure on SMEs. But what's actually happening from a regulatory perspective, or what standards can they adhere to? Well, first of all, there's going to be requirements from big suppliers. So ESRS E1 climate change, depending on who your suppliers are, if they're an SME, we need their data. Also, when we look at ESRS S2, workers in the value chain, we need data of SME workers. So SMEs are going to get dragged into this, and that's known in accounting terms or financial reporting as the trickle-down effect. It's an effect from bigger corporations that trickles down to small companies, and then it trickles down again maybe to micro entities or whatever it might be, okay? So there's a couple of very, very difficult ones. Now, guys, I also have a link here, which again, I'm sure Nazi and the guys will I have no problem with the slides been distributed. If you click on that link, you'll be brought to the website or a PDF document of Sustainable Finance Platform, ESRS. LSME is listed SMEs exposure draft, and VSME is what it's known as, voluntary SME standards, and it's the exposure draft. So if anybody's interested in this, or they work in an SME, I would recommend looking at this, or if you Google it, you should find it. And at the moment, it's open for consultation until the 31st of May this year, where you'll be able to provide feedback on the reporting standards specifically for SMEs, which are all voluntary at the moment. So here is some of the key features at the moment, or what EFRAG are proposing. It's not legally binding. It's more so to help fulfill market needs. Now, I'm just going to skip on from this one. In terms of proportionality, it's simplified language and very, very small in compared to the full list that I showed you guys earlier on the Excel spreadsheet. But ultimately, the objective for VSME, or the voluntary sustainability or voluntary SME reports is to provide a simple reporting tool that can credibly replace a substantial part of the questionnaires used by business partners. Now, this is where it gets interesting, because a lot of SMEs are under pressure at the moment anyway, because big suppliers or big organizations want this information anyway. Lenders, investors, corporate clients, different supply chain dimensions, they're looking for this data already. So what EFRAG are trying to do is compile a big list of what are the standard questionnaires that big corporations and suppliers are seeking from SMEs, and they want to develop a framework around that so that you're going to capture the data once and you don't need to keep replying to different suppliers. Now, whether suppliers are going to be satisfied with that or not, I don't know. The purpose is to standardize the existing and expected business partner data request. And again, considering the fast evolving developments in sustainability, I think it's going to be very, very challenging, but they have some sort of plan in place, and it's looking like 2028 will be when they're fully finalized, but SMEs will only voluntarily apply to this or submit these particular reports or produce these particular reports. It's not mandatory. Obviously, CSRD is mandatory for the biggest companies in the EU. And that's pretty much just another, I've kind of talked about all this stuff already, guys, I suppose, in terms of, what EFRAG are hoping is the best case scenario is that there's some market acceptance for their voluntary SME framework, and that suppliers will use this instead of reaching out to companies directly, perhaps. And it's just a tool that will be more competitive for those particular companies and try to reduce the administration burden on SMEs, which is vast at the moment anyway. Guys, we have about 8 to 10 minutes left, so we still have a couple of slides, but I'm just trying to talk you through different components before we get to maybe our tips and best practices if you are in a position that you're looking at CSRD implementation in the next couple of years, for example. Now, CSRD and assurance, this is something that is really, really important, because we can produce these reports, but if they're not assured or they're not audited, what difference does it make, perhaps? Okay, how accurate is that particular information? So this has sparked a lot of debate, but the CSRD makes it mandatory for companies to have an audit of sustainability information that they report. So this is a big, big change. Now, it's not going to happen immediately, but it's hopefully will be in place by 2026. At the moment, it's on a limited assurance basis. So in auditing, limited assurance means it's an engagement that involves less evidence accumulation and less extensive procedures than for a standard audit. We don't have to drill deep into the information. So, for example, if we produce our scope 1, 2, and 3 emissions, if it's in line with previous years, or we can see some sort of trend in terms of usage or sales and it replicates something similar, we can sign off on it. It's only a limited assurance. But if we have to provide reasonableness assurance or reasonable assurance, it's in a lot of detail. Then we have to provide documentation or documentate all the evidence to show where this figure is coming from. Where is our scope 1, 2, and 3 greenhouse gas emissions coming from? And that is going to be very, very challenging. So it is anticipated that auditors will provide reasonable assurance on sustainability information soon. Again, I don't know the specific time frame, but it's thought it's going to be 2026 in respect to the 2025 financial year. And reasonable assurance in auditing is a level of assurance that there are no material misstatements in the financial statements. So that means there cannot be a material error here. So auditors use evidence gathered during the audit process to provide reasonable assurance that the financial statements present a fair view of the company's financial position. Now, the International Auditing and Assurance Standard Board, IAASB, have developed a piece called Sustainability Assurance. I have a link to their website there. And also they have an exposure draft known as ISSA 5000. And that is pretty much guidance on how to audit sustainability related information. So that is the first, concrete piece of standards that we have for auditors to adhere to. And again, if you guys get the slides, you can click on it. You can look at what the status is at the moment. It's past the consultation phase. So I would argue in the next couple of weeks or months, we will have the full set of standards, which is ISSA 5000. Now, guys, just for the last couple of minutes, essential steps. And as you can see from what we looked at earlier on in the Excel spreadsheet, I think, you can see there's a colossal amount of information. So what I think, and again, this is based off a lot of research, speaking to people, surveys that we've undertaken, and so on to come to this. And really, in terms of essential steps, well, number one for a company, what are the material aspects of our business? Determine the relevant ESG factors and assess the impact of business activity on sustainability matters. That is number one. What is material for me? What is material for my company? What's the financial materiality? And what's the impact on the environment materiality? The data requirements. So after this, if we identify what the material aspects of our business are, then we know what sustainability data is needed. We need to understand the scope of reporting, whether it's energy use, greenhouse gas emissions, social impact, and so on. What are we actually reporting on? So what are the data requirements based on the materiality assessment of our company? Now, this is something that's very difficult. And again, we could have a full workshop on this, the data collection mechanisms. Decide who, or I put in brackets, or what team, because I don't think it's a who, it's a big job. Who will gather the data? Identify the roles and responsibility for data capture. Who is actually going to do this, and who's going to manage the data appropriately? Something that I believe, and again, from talking to multiple different SMEs in particular, but that gives you good insight into what other larger companies are doing. And I know from, I think it was World Economic Forum, the last meeting they had, it could have been in Dubai, I'm not sure, but I know I listened to an interview from the CEO of Unilever, one of the biggest companies in the world, that they are struggling big time with this stuff, and mainly around data capturing. Now, if one of the biggest companies in the world is struggling at this, how are smaller companies going to engage properly? So data capturing tools and systems. I'm part of a ACCA roundtable panel discussion recently, and it's going to continue for the next couple of weeks on sustainability reporting for SMEs. And when they put out a survey to their members where they captured, over 1,000 responses, over 50% are still using spreadsheets when it comes to capturing data. So that's a big, big, big problem. So what are the IT infrastructures for data management? What sustainability software do we have? These are questions that we need to figure out when we're on this journey to reporting this data. Data verification processes. So, is there a method for ensuring the data accuracy and reliability? Do we need to prepare for internal and external data verification through an audit? Then we will look at reporting framework alignment. What are we aligning with the ESRS and the EU Green Taxonomy? That's something else that not for this brief. It's maybe another workshop on the EU Green Taxonomy and what is involved in that particular reporting standard. And then obviously to ensure legal and regulatory consideration. So make sure, is there any regulatory changes, which I don't think there will be now with the standards, but maybe in a couple of years there will. And make sure that we are legally compliant with all reporting activities. Now, there's a lot to take in there. If there's people on the call who are, going to have to prepare reports next year, you really, really need to get a move on with this type of stuff, and you really need to figure out how you're going to do it, because at that stage, it's getting quite late. That a lot of companies are in the preparation phase now, or they maybe are doing pilot trial tests or whatever it might be. And mainly the big issues that I'm finding, or from talking to people who are doing this in companies or are providing consultancy services, the data and the data capturing. They're the two big issues that we're foreseeing. Best practices, okay? And again, people who are joining us, you're probably on different time scales in terms of, do you have to submit under the CSRD, or are you compliant under that? Or is it going to be in a couple of years, or are you an SME? All these things are the variables that I'm not sure about, but the slides we're looking at now will be very dependent on what stage you're at, really, folks, okay? So early planning and strategy development, obviously that's going to be essential for anything like this, any regulatory change, any implementation of anything, whether it's a new IT system in an organization. We need to plan, and we need to have a strategy developed for this. Building a dedicated sustainability team. Do you have one in your organization at the moment? Are you using external consultants? How are you going about it? Stakeholder engagement, I think, is going to be very important. So the more stakeholders we bring on this journey, the more buy-in you're going to get, and the more willingness to comply will be. Implementing robust reporting systems. Again, one of the biggest issues that companies have is capturing and reporting the data. What do we need to do? And even when we know what we have to report on, how are we getting it? Is it accurate? You know, these are questions that remain to be answered at the moment, but we will find out as companies start reporting on this over the next couple of years. Regular training and awareness. Well, even stuff like this particular masterclass, you're getting more familiar with what is actually happening, but companies need to train and be prepared to report over the coming years. Continuous monitoring and improvement, auditor alignment and readiness, and alignment with our corporate strategy. And that's more so when we actually start producing these particular reports. Just in terms of the future outlook, guys, and I've put just 2 or 3 slides together, and then we are going to be wrapping it up, and I'm looking forward to some questions in the 10 minutes that we have. Now, I won't probably read through all of the points in green. They're just fleshing out the points above a little bit more, but anticipation of expanding regulatory requirements. I would say, based off feedback and based off accuracy of data, maybe there will be a tightening of sustainability reporting standards, or maybe it will be more specific what actually has to be reported on. That's just, this is all my own personal opinion, by the way. Incremental implementation and improvement. I think it's going to be very difficult initially to report on this data. So it's going to be a learning curve, and it's going to be gradual progress year after year after year. Evolving role of assurance providers. So I think the accounting, and well, actually we talk about that next one, but the assurance providers or auditors, their role and function is going to change dramatically, because now they have a big role to play in sustainability data. Is it going to be climate scientists who are going to help with this? Is it going to be accountants? Is it going to be external consultants? A lot of uncertainty, but there is great emphasis on assurance of non-financial information, something that will lead to increased transparency, something that will lead to the verification of the data available. Enhanced role of financial professionals. So, you know, a lot of people think accountants are boring, and maybe we are, but they have a huge role to play in sustainability reporting, because in most organizations, and especially from the research I've conducted with SMEs, it's accountants who will be the ones that will be reporting this data, or they will be the ones that have a big understanding and knowledge of managing data anyway, and it could be up to them to report this. So there will be specialized expertise in ESG accounting and consultation services. That's a given. They're doing it already. We know the top 4 firms in Ireland, UK, and globally, they have sustainability divisions now, and they're hiring in experts from the field of maybe climate science or whatever it might be, to try and embed them into the accounting mindset and auditing in particular. Integration of technology and reporting. I think, you know, with the power that data analytics and AI has in particular, I don't see why we can't get more efficient sustainability data processes to make it easier for companies to report. Guys, before we move on to questions, and again, I'm aware there might be a couple of a second delay here, but just in terms of conclusions, there are huge challenges on companies to report this data, as you can imagine. There's huge pressure on them, and there's going to be huge pressure on SMEs or suppliers that are SMEs to help larger corporations report this particular data. Strategic advantage in sustainability by adhering to this and buying into it. Well, I have a couple of dots after, because we don't actually know yet how this is going to pan out. But ultimately, you would think if you have to report and track your data, and you can set targets that you're going to try and cut down, or you're going to try and improve in certain areas, surely it will be a strategic advantage. I hope it will, and I think it will. But this is the first phase in actually managing and reporting that data accurately. I think education and capacity building for more insights like today, or more workshops from the Institute of Sustainability Studies or other professional providers or whatever it might be, is hugely beneficial to everybody who's on this particular journey, to learn more and to share their insights from what it's like to report on this stuff. It will also hopefully lead to more transparency and integrity, and that's what we want from these particular reports. So Nazia, I don't know if you're still in the background, but if there are questions, I'd love to have them. I know that you guys have a very active LinkedIn page. If anybody wants to follow it, I'm sure maybe you're on LinkedIn at the moment, so that's maybe a silly thing to say. So you should follow the page. And I'd like to thank you very much for your time. And Nazia, thank you for inviting me to speak.
Of course. Thank you so much, Sean. That was an extremely insightful and very informative session, especially the Excel on data points. I think that's a very valuable resource. And we're going to make sure that we sort of share the webinar recording along with these slides for the benefit of all of our participants. There are some questions coming in, so I'm just going to read them out. So we've got one from Barbara Davis asking, how does all of this affect the UK?
At the moment, it doesn't. So it's an EU directive, so the UK are out of it. However, in Ireland, we have a fantastic relationship with the UK, as everybody knows from a business capacity. And if they are a subsidiary of an Irish entity, or whether that's, French or German or whatever it may be, falling under the EU, that particular company, let's say an Irish company that has a UK subsidiary, we will have to report on some of the UK data. So therefore, companies in the UK will have to fall into this based on, let's say the parent company or whatever it may be. So they will be brought in using, let's say, the trickle down effect, that they will get captured in some capacity, but they themselves, if it's a UK only company, they won't have to do anything. But it is known that the UK government are looking into this and they're trying to bring in their own suite of standards, but we don't have anything concrete at the moment.
Yeah. And how would you say would that cover the US companies as well?
Yeah, it's going to be the exact same. So again, in Ireland in particular, and I know I'm speaking from Ireland because I'm in Dublin at the moment, and I know we probably have different participants from all over the world, but it's going to be the same. So we have an Irish company, if they have a US subsidiary, we have to report on some of that data that's happening anyway in the US. And that's where a lot of companies in the US, from my research and talking to different companies, they have divisions in some of the biggest companies in the world. One pharmaceutical company that we met to discuss this and just to get insights into what they're doing. They have a team in the US, and one of their components, or one of the divisions, is looking at the CSRD to understand how their European operations will be impacted on this.
Yeah. Brilliant. We've got another question from Stefana Sopko. I hope I got that right. The question is, what measures can ports take and what are their main priorities now around these new regulations?
Yeah, I lost you there, Nancy. What measures are?
What measures can ports take and what are their main priorities? I'm assuming
Can what take?
Ports, like shipping ports, I think.
Oh, shipping.
Yeah.
Okay. What step can ship? I suppose when you're looking at your materiality assessment, again, it's going to be a case of, well, what impact are they having? So I imagine they're going to be maybe, let's say, water and marine activity is going to be something that they should be reporting on, because they're probably going to have a lot of pollution because the fumes are going into the sea or whatever it might be. So each company will be totally different. So if we're looking at boats or shipping or shipment or logistical companies, they will be totally different to fossil fuel. They will be totally different then to technology companies or software providers. And we have to really focus on our materiality of what is going to impact each company.
Yeah. I think one question that comes to my mind too is just compliance, that it sort of impacts stakeholder, your trust and your relationship with stakeholders, and what strategies can companies sort of employ to build and maintain that trust through this entire process of reporting on CSRD?
Yeah, it's really interesting. And again, going back to, let's say, some of the best practices or hints and tips, it's to engage with stakeholders as quick as as much as you can. So if I'm a big enough company that falls under the CSRD and I have a fantastic relationship with a lot of my suppliers, why not try and meet them? Why not try and explain to them, this is our materiality assessment. We're going to need this information from you. We want to assist whatever way we can, because what I find is a lot of the smaller companies or smaller suppliers or SMEs, they want more assistance from the big companies. So if we take I'm not going to mention any companies now because I don't want to end up getting in trouble, but let's say if we look at a large supermarket chain that's all over Ireland and the UK, they deal with a lot of suppliers, but they're going to need information from those particular suppliers. And it's about assisting, making them aware, this is what we need. Do you need assistance with this? Because with SMEs, they feel they're way out of their depth. There's so much pressure on them to report this stuff. So I would say if you engage with your stakeholders, do it very early, do it frequently. And maybe that might be by methods of, just an email or communicating with them, or depending on the company you're in or the size of your entity, to meet them or have an open kind of town hall style meeting to try and explain to them what's required and how they're all on this journey together, because ultimately everybody has to help each other, and the biggest companies in the world will have to lead on this because of the resources that they have, in my own opinion.
Yeah. Just on that then, like, do you think there are any specific industries or sectors that might actually face unique challenges and opportunities in really aligning with those CSRD requirements, getting sort of the right data from their stakeholders? Does any industry stand out in your head?
Not at the moment. It's a very good question, because I see it that a lot of industries are gonna struggle with this. If Unilever are openly saying that they have issues with data collection and capturing CO2 emissions from scope 3, well, then a lot of other companies will, because there's more complex entities out there than Unilever, for example. But when we look at fast fashion and retail and stuff like that, like where these clothes are being produced, are we going to get accurate data from workers in the value chain, for example? How are we going to capture or calculate the fact that we have shipments coming from Southeast Asia to Europe? And how accurate is that going to be? So I think there's going to be big issues. But again, companies will focus on what their materiality assessment is. And my only fear is, are they going to be fully transparent, or are they going to pick areas that they know they can report the data and it's not going to make them look bad?
Yeah.
And that's why some people suggest that the CSRD isn't strong enough in terms of what's mandatory or not. But I think it's a good start. It's definitely a step in the right direction. And it's going to be very intriguing to see what actually happens over the coming years.
Yeah, definitely. Okay, so we actually hit the right the time mark. So we'll wrap up if there aren't any more questions. But of course, this webinar has been recorded. The recording will be up on the ISS website. So log in. If there are any more questions, you can get in touch with us. We'll put you in touch with Sean to get them answered. So brilliant. Thank you so much, Sean. I think that was a very informative session, and I hope that everyone took a lot of value from it, and it has given them some sort of a direction on how to basically approach CSRD reporting. If you want to learn more about CSRD or sustainability in general, do visit the ISS website and explore more. We've got our STAR course, which is the Diploma in Business Sustainability. It's a course designed to provide you with the right tools and templates to get you started on your path to sustainable business practices. And we'll be holding many more sessions like these all of 2024. So keep visiting our website to know more details, and we'll see many of you there. Thank you once again, Sean.
Nazia, thank you. Thanks for having me today.
Of course. Thank you, everyone.